Welcome to Women in Wealth, the podcast from Investors Chronicle that aims to give you the tools to make the most of your money, even when society makes your financial life harder than a man's. I'm Madi and Val, digital production journalist at Investors Chronicle.
And I'm Val Cipriani, personal finance editor at Investors Chronicle. In this podcast, we tackle the big money issues that disproportionately impact women.
And this week's episode, Val, is money and relationships. A big topic, quite a personal one, but we're just mostly going to think about it from the perspective or the financial perspective about cohabitation and marriage.
That's right. We're going to be discussing how and to what extent you should mix your money with your other half.
And to be honest, on your emotional well-being as well, I can imagine, because yes, having these conversations is a bit uncomfortable, does maybe not be very nice, but in the long run, it will make for a bigger savings pot and maybe even a better relationship.
Yeah, 100%. I think it's not a topic people and couples necessarily are super keen to discuss, but then in the long term, the incompatibilities, at some point they do come up. And so having that ability to communicate about it and to discuss them and tackle them makes a really, really big difference, basically.
Definitely, yeah. Having those difficult conversations, and that's what we're going to try and do today. Or maybe not have the difficult conversations ourselves, but we'll look at the different points and approaches to marriages and cohabitation and how you can kind of plan around those advantages and avoid some of those risks.
That's right, yeah.
So let's start from the very beginning. Let's say things are going well and you're wanting to move in with your partner, still a far cry from wanting to get married, but you want to rent. Are there still money things that you need to talk about? And if so, how?
Yeah, I think there are still things to talk about. The conversation still needs to happen, but it's actually a good time to get it started because it can be relatively straightforward. So if you are both just renting and are looking to move in together into a new rented place, there are maybe 2 or 3 main things you just need to discuss. The first one is how you split the bills. Quite basic thing. I don't know, what do you reckon? Do you split the bills equally?
I would say it's a personal choice, definitely, but usually the fair thing to do. I guess you should factor in maybe the financial differences between you, like career-wise, generally that kind of stuff. But yeah, usually 50-50.
Yeah, I would agree. I think basically you start by 50-50 as a benchmark, and then you can have a conversation around some situations where you might need to do something a little different, which I think can be if there is, for example, a big disparity of income between the two of you. Yeah, as you were kind of alluding to. Especially because I guess you end up choosing a place that works for you both, but it might be a bit more expensive than what the person on the lower income is comfortable with or wanted to do. And so I think if you then are the person on the higher income, you know, you maybe volunteer to pay a bit more of the bills, especially because, you know, if in the long term the plan is maybe to buy together, to build a financial life together, then you want to give the other person on a lower income the opportunity to build up their savings. So, you know, they can maybe contribute to a deposit together. So I think there are maybe some situations where you think about changing the split, but otherwise I would agree you start by 50-50.
Okay, so you got to factor in, you know, who's kind of going to be paying what, and there is, you know, because not all the work in the house is, you know, just paying the bills. There are obviously a lot of chores to be done, so that's something to really factor in. What else is there to consider as well? Yeah,
so I would agree with you. Let's say as part of the bills conversation, you also kind of decide who splits, like who does the admin work for the bills.
Who takes the bins out, who cleans it,
yeah. Who deals with Thames water, which I wouldn't recommend. all of that, you know. So that's also part of what you need to have a conversation around. And then from a purely admin financial perspective, the other big thing to think about is the contract of your rental place. Basically, you know, if you're moving in with someone and you agree to a 12-month contract, for now, the way the law is as we are recording, it's not too easy to get out of it. So, you know, you have a joint rental contract that might be maybe a year, and you're both responsible for paying the rent. Now, what that means is that if you break up and there isn't a breaking clause in the contract, you're going to have to rely on the goodwill of your landlord to allow you to say, replace the partner with a flatmate or, do something around it. So, you maybe think about it a second before just moving in because, well, I think especially in London, there is a trend to just be like, oh, let's see how it goes because renting is so expensive anyway, having another person who can split the cost with.
Yeah,
it's quite good.
Definitely. I mean, it does make a lot of sense, but you are right. It's obviously not nice to think about, a future where you and your partner are together, but you do have to think about those practical things. And you mentioned, I think you mentioned like a joint account. Is it like a necessity for a couple renting together to have one to make it easier to pay bills, that kind of thing?
It's an option. It's not a necessity, I would say. So as you say, it's quite convenient. It's quite practical. However, if you're just renting, you do not necessarily need one. And you may not be fully aware of the consequences of having a joint account with another person. So a joint account basically creates a financial link between you and that person. So what that means is, you put money in a joint account, you both have equal access to the money, and you both have equal rights to that account. If you are with someone who turns out not to be so great with money, that can be a problem because, they can, even at the most basic level, they can take all the money out and you have no right to claim it back.
Oh, wow.
And then there is also the fact that even most accounts have overdrafts option. And then if the other person takes one out, you're also responsible for paying it back. And again, if something goes very wrong with that, it can impact your own credit score. So your then ability to borrow money in the longer term for, say, a mortgage. Now, obviously, this is quite a worst case scenario. You don't want to think that your partner will be the person that puts you in that position, obviously.
Steals the money.
Yes, exactly. But I would say, if you don't need it, why get yourself why put yourself in that position? Then if you buy together, the financial link is there anyway. So
Yeah, of course. I mean, I think that from everything you said sounds maybe a little bit riskier than is sometimes worth doing.
Yeah. I mean, I had that experience myself. I was with someone. We were together for a very long time, but we were very young, so we were just renting. We were preparing to buy, but we were not quite there yet. We didn't have a joint account because we didn't feel like we needed it. And then, we ended up splitting up. And it was relatively simple because we didn't have to think about all those things. And obviously, it's a difficult time. You're both stressed out when something like that happens.
Yeah.
So one less thing to think about can be useful. And we only had to think about the rental contract. So I should say on that point that I made before, the law is probably going to change. And because there is the renters bill that is going through Parliament as we record. So later this year, there will probably be a change. But, it's not done yet. And we don't know when it's going to come into effect.
Okay. And let's do a little scenario change. Let's say you're, dating someone and they're already a homeowner. How does it all work then?
Yeah, that's a bit different, isn't it? It's something I hadn't thought about massively before, but now, in my 30s, I have a number of friends who are actually finding themselves in that position. So they're with someone who is already owns the place. So what do you do when you want to move in together? Do you go to theirs? And I think, in some ways it's quite a good option because it gives you a lot of flexibility, even more flexibility than, renting a place together because you can leave whenever you want. So, there is that pro.
Yeah, that does sound like a bit of a pro, but also you have to factor in, I guess, if things don't go well, when you move out, you're basically just paying off some of their mortgage. Now you don't have anywhere to live.
Yes.
So
yes. I think that is, those are the downsides. Well, first of all, the other person kind of can kick you out anytime in a way. Like
That's
there's no,
very true.
your name is not on the thing.
Yeah.
So there is that. And then, as you say, I think it can create some friction in terms of how you split the costs. Because, what do you do? Do you just pay half of the bills? But that seems maybe a bit low. But then on the other hand, as you say, do you just contribute to your partner's mortgage without actually buying anything? Are you paying rent to your partner?
It's all just quite messy, isn't it?
Yeah. Which doesn't mean it's a terrible idea. I think in some ways it can be quite useful. But I do think that if you do something like that, really the conversation part is really, really important, because you need to have a conversation about all those points we just mentioned and sort of decide what works best for both of you. Also, again, because if you're moving in your partner's place, it's the place they picked, in a place they picked. Like, it may not be a huge fun. So
that's really true. I think, you've got to have all your cards on the table, especially if you're going to make this relationship work. Aside from the financial side, they need to know exactly how you're going to be feeling and how much you can afford throughout all of this.
100%.
I'll be factoring all of this practical stuff in if and when I ever get into that situation.
I think, the other the sort of final point to make is that if you live in another person's flat or house, in the short term, it could be a functioning solution. But in the long term, especially if you're paying some rent towards it, and then, if as a couple you never want to move out and you don't want to get married, then you start maybe considering like changing it into joint ownership.
Okay.
It doesn't need to be a thing you do quickly. It's a thing for like a long-term relationship where, again, you share everything. But just being in a position where you live somewhere and you're contributing towards all the costs, the furniture, the refurbishing, whatever it is that you do, it's not great without official recognition.
Of course, and that just means that you have a bit of protection if things do go wrong.
Yeah, that's the idea.
So we've covered the more standard first step that people take, which is renting together. But now, let's say things are going really well and you want to buy together. What do you really need to think about?
Yeah, really exciting time, but
Very.
So many things to think about. I think, as a starting point, to just start talking about it and looking into it a lot sooner, because basically you've got to think about the deposit, you've got to think about how much the house you want to buy is going to be worth. You've got to think about the mortgage. You've got to think about fees. You've got to think about taxes such as stamp duty. We would need like 5 episodes just about, buying a place. But generally speaking, have those conversations with your partner early and sort of look at your finances together to figure out what you can afford. So that's the first starting point.
Okay. And I have heard quite a lot about a lifetime ISA or a LISA, which is a really big factor in buying a first-time place. That's where whatever you put in, the government contributes 25%. How can that benefit couples who are buying jointly together?
So it's a really useful account. And as you say, you put in up to 4K every year,
okay.
And then the government puts in an extra 25%. So if you put the full 4K, another extra K. So that is really good.
That sounds nice.
It is nice. And, in terms of buying with your partner, you actually cannot get a joint lifetime ISA, which is actually quite good because then, each of you has its own. And then you can just, use them together if you do eventually decide to buy together. But opening a lifetime ISA per se is not a commitment to buy together. You're just saving for your own flat and potentially for your retirement, which is the other way you can use a lifetime ISA.
Okay, well, I do have a feeling there's a bit of a but coming now.
Yes, there are a couple of things to think about. So 1/2 problems. So the lifetime ISA, the maximum value of a property you can buy using your lifetime ISA money is £450,000. Okay. Now, in London, that is not a lot of money. So I've got the data here. The average house price in January 2025 in London was £564,000.
Wow.
Now, obviously, that's the average, but still, it's you're ruling out a lot of property with 450K. And then there's the second problem, which kind of builds on this one, which is that if you take out the money for a reason that is not buying your first home or retirement, so you can access the money once you turn 60 for whatever you want. But before you turn 60, the only reason you can take money out of your lifetime ISA is buying your first home that must be valued at less than £450,000. So if you take the money out for any other reason, there is going to be a penalty. So the penalty is not just the amount the government gave you, so not just that, but it's a little more than that. So they're actually taking away a bit of the money you put in.
It's quite a big catch then to all of this. So it obviously is a very good thing to go for, but there are definitely quite a lot of risks.
Yeah, you need to kind of be aware of what it means. Like if you open one, you need to be reasonably sure that you're going to be able, to use it for that purpose, or be aware that if you're not able, like if you want to buy a bigger house, for example, then that money, you will not be able to touch it unless you're willing to pay the penalty.
Yeah, it's not just as simple as free money towards a house.
Exactly. No, it's not.
So another scenario change. So let's say you are buying a property with your partner. How do you decide who contributes what to a mortgage or deposit?
Yeah, it's a really good question. And I think possibly the source of, again, some friction between couples, because I feel like it happens quite a lot that one of you may have more towards the deposit, more income. Sometimes a family of one of the person decides to contribute and the other family maybe can't afford it. So, there's potential for a lot of differences. Now, the issue here is that there are two ways of buying a property between two people. So you can be joint tenants or you can be tenants in common. So if you're joint tenants, and this is the setup that couples normally go for, you're buying together and you both have equal rights to the entire property. So what that means in practice is that, it doesn't really matter if one person puts more money and the other person puts less money. You're both 50-50, kind of.
Okay.
So if you then split up and you sell the house, you get half each. If one of you sadly passes away, the house is automatically left to the other person. So this is the reason why couples tend to go for this option, because, it's just like it's the idea of creating a life together. And it can be, I think, quite a good option when there are disparities between the couple in terms of, one of them may earn more money, but maybe the other person does more of childcare. So then, you both have the same right to your place, which makes a lot of sense.
Yeah, that does make a lot of sense. It factors in, so the joint tenants, right, factors in the differences in contributions. Doesn't factor in the differences between contributions. Okay. And then the tenants in common is not equally split 50-50. It does really factor in who pays what towards the mortgage, who pays what towards the deposit. So that definitely sounds like something that would work better for siblings or for friends rather than two people planning to spend the rest of their lives together.
Yeah, that is the idea. So tenants in common, you each own your share of the property, and it doesn't necessarily need to be half-half. So it can reflect if you put in different contributions, but then when, if you break up and sell, it is sold, proportionally. The money is distributed proportionally. And also, if one of you passes away, especially if you're not married or if you don't have a will, then the share, like your share, doesn't necessarily go to your partner. It may go to someone else, depending on, again, how it's set up. So as you say, typically an option that is more commonly used by, siblings, friends, not necessarily by couples, because it doesn't have a very nice feeling, does it?
It doesn't feel very romantic.
No, it's definitely not a very romantic option, no.
Each week, we get one of our lovely listeners to write in and ask a question that they're burning to ask Val. And in this week's episode...
Hi, you've reached the IC's Women and Wealth podcast. How may we help you? My partner and I have been together for 5 years. We own a flat together and are thinking about having children. I'm not hugely fussed about having a wedding, but I wonder, should we get married for practical reasons?
Okay, so the listener is really coming in with some financial admin perspective, so hats off for the practicality. What do you think, Val?
I think, well, as you say, it's a very good way of, approaching this, very rational. I really like it, first of all. It depends what they want. So let's maybe look at what, getting married means from a financial and admin perspective, and then maybe she can give herself the best answer for her. Obviously, getting married, it really means mixing your finances together. So generally speaking, any assets that have been acquired during the relationship are treated as matrimonial or joint assets. So, regardless of whose name is on those, so it can be savings, it can be property, it can be whatever, it's together. So depending, if you're the person who has less money, it's kind of advantageous. If you're the person who has more money, if you put it very bluntly, is a bit less advantageous in a sense, right? Just from a very sort of cold perspective. However, it comes with a lot of financial protections, especially for women. Again, this is not always the case, but sometimes they are the people who earn less in a relationship. So it's very important to keep this in mind. If one of you passes away and you are together, but you're not married, the other person is not automatically entitled to anything really, or almost anything. So you would have, it's not like you cannot sort it out, but you would have to make a will, because otherwise the rules do not give your partner, the money you have in your bank account. Whereas, if you marry and one of you passes away, it's the other way around. Everything automatically passes to your spouse, unless it was specified otherwise for some reason, for example, in a will. This is to the point that if you had a will before and then you married, it actually becomes invalid. You need to make a new one, or otherwise everything will go to the person you have married. So, it's a strong financial protection. It's a strong link. It depends a little bit if that's what you want. It involves a lot of different aspects of your money life, potentially even things that you may think of as a bit more personal, like a pension. It can actually be taken into account into a divorce settlement. So you need to be really ready to share your finances with this person, but it can offer good protections, I think.
And how does this change if there are children involved?
So I think the point is similar. So if there are children, so let's start from the beginning. So unmarried fathers do not automatically acquire parental responsibility for the children. It's very easy to sort out because you just need to have it in the birth certificate.
Okay.
But if you're married to the mother, you automatically acquire parental responsibility for the children. And that really gives you an idea of how this thing is treated. So if you are unmarried, you need to make sure that, everything is properly set up. If you are married instead, it just kind of automatically happens. And it's similar. So for example, again, if you're unmarried, you can still get like child maintenance if you then break up, and one of you has to take care more of the children and all that. So there are protections in place even if you are unmarried, but they're just less strong. Again, something worth thinking about, because our reader says she is thinking about having a family.
Yeah.
Not urgent, not mandatory, but something to consider perhaps.
Quite a lot of good admin tips involved in getting married, really. And I remember seeing somewhere that there's also a tax advantage to getting married. Is that right?
There can be, in a sense. It is a bit odd, but there can be. So the principle here is that, so if you're married, you can move assets between you without being liable for taxes, like capital gains tax, for example. So what happens is that, if I have a lot of assets and I marry someone who doesn't have many assets, I can just give some of those assets to this person without paying any taxes on it. But then this other person may also be the person who's on a lower income. So if they're on a lower income, they might well be on a lower tax rate. So that means that then the taxes on those assets I gave to them, they're lower than they would have been. So together we pay less. Yeah. That is the general sort of the little trick you can do, which mostly works if you and your partner are on a different tax band. So usually that means one of you earns a good amount more or a bit more than the other person. And then the other thing that is a bit more general but can come with tax advantages is doing your financial planning together. There may be a disparity between you, but each of you only has a certain set of, for example, tax-free allowances. So the most obvious example here is the individual savings account, so the ISA. So each one of you can put up to 20K a year into one. But it may be that one of you has a really good job and is in a position to put aside, 30K a year, and then the other person not quite and can only save 5K a year, right? But what you could do is that the person who has more money to save just gives the money to the other person so they can put it in their ISA. And between you make the most of the two £20,000 allowances you have.
I see, okay.
Yeah, because otherwise, if the person runs out of their own allowance, then they will pay tax on anything on top.
It just doesn't seem like a very efficient way to do it. Okay.
Exactly, but then again, it does mean that you're handling your finances together, but then you're married anyway, exactly. So you might as well.
You're sharing other things, so
yeah,
you may as well.
Yeah, exactly, yeah. So
finances.
So yeah, it can be useful. Although I guess, I mean, getting married is quite expensive.
Yeah, it's not a cheap thing, is it? I've heard how much the flowers are just alone, and definitely not rushing to get that done anytime soon. To be honest.
I guess my point was kind of like you need to save a lot of taxes before you've made up for the cost of a wedding. So maybe just don't do it just for tax reasons, because it's not. I don't think it's going to work very efficiently or quickly. Yeah, that's it.
A lot to really reflect on beyond whether the fact that you're truly in love with the person that you're about to walk down the aisle towards. So, I mean, thank you so much for condensing all of that into just one episode. That really can't have been easy at all. We'll make sure to link any relevant Investors Chronicle articles in the show notes for any listeners who are looking to learn a little bit more about this topic.
This podcast is all about giving women the tools to be more confident and make the most of your money. So we hope you find that useful.
If you enjoy the show, subscribe to Investors Chronicle on whichever platform you get your podcasts on. And don't forget to head to investorschronicle.co.uk, where you can get access to all of our stocks and shares news analysis. Also, if you have any questions that you're burning to ask Val and I, email womenandwealth@fd.com and we can look into them for the next episode. Thanks for listening.